Hello folks, I'm Trev Makes It Easy, the channel where we make learning easy. In this series, Trev on Econ, I'll be taking you through topics you're likely to run into in any introductory course in economics at the college or university level. My goal is to make economics less scary, more approachable, and, if I can, mildly enjoyable. With that being said, let's make it easy. Welcome back. Today we are going to talk about another form of government intervention in probably something we're a little more familiar with in our day-to-day lives, and that's taxes and subsidies. So tax and subsidies, probably more so the tax side of things, are something that we run into all the time in our daily lives. You also probably experience subsidies, just maybe not as directly. Although if you're in school, you might be getting subsidized education in some way. So what are these things? Well, taxes are really just a fee set out by the government on certain activities, purchases, etc. So it is a way for the government to collect money. And with taxes, we're trying to do really two things. One is we're trying to collect money, but two is usually these are used to dissuade negative behaviors. So if you think about a lot of things that are taxed in life, cigarettes, alcohol, pornography, cannabis, if you're here in Canada, there's a lot of taxes out there. And the reason is the government doesn't ideally want you doing these things, or at least wants you to reduce the amount of things you do. So what they do is they introduce an extra fee to make it more expensive. And the idea is twofold. Number one, some people will stop pursuing that habit or that vice or whatever it might be because it's now too expensive. It's not a huge change, but some people will drop out of the market. What also happens, though, is the government collects money from you for doing that activity. Now, in a perfect world, what would happen is the government would then take that money and set it aside, probably in some sort of investment fund, so that they could use that excess cash to then pay for any sort of health issues, security issues, whatever kind of issues might arise from use in those activities. So to give you an example, let's take smoking, for example. You choose to smoke, not great for you. I think we kind of all know that. So the government also doesn't want you to smoke because, again, at the end of the day, you might get sick, likely to get sick, and you're going to require healthcare, and that's expensive and, just not great for the society. So the government says, why don't we impose a tax? And the tax basically says you can still buy cigarettes. We're not going to outlaw them, but they are more expensive. Now, some people will now see that and say, actually, maybe smoking isn't worth it. Maybe it is too expensive, and they'll try to quit. The problem is it's very difficult to quit smoking. It's a very addictive habit, so the price won't get a lot of people. But what the government can do is once they collect the money from the people that still smoke, they could put that money into healthcare, and it's almost like the smokers are paying insurance in a way for future problems. They're putting money away now to pay later on for any sort of issues they might come into. Taxes are a fairly blunt instrument. They're effective, but just like price floors and ceilings, they're fairly blunt. So there are some downsides. Taxes as well just tend to make people mad. It's not really fun opening up your paycheck and seeing all the deductions. You eventually get those back in like old age security and different things like that, hopefully. But if you don't see your government using the taxes in an effective way, it can feel particularly bad, right? Subsidies are the opposite. These are money given out by the government for doing certain activities, purchases, etc. And instead of collecting money, this is a way to give money for certain behaviors, activities, behaviors, whatever you want to call them. Now, these basically operate as a reverse tax, to be honest. A tax is where the government takes money from you. A subsidy is where the government gives you money. These tend to be used to encourage positive behaviors. Okay. When there is a thing the government is trying to get you to do more of, they will usually subsidize that thing to basically give you money to make it more affordable to you, make sure the seller is still getting their cut, and hopefully that will make you pursue more of that. So just like with smoking, the example here would be something like education. Again, at least here in Canada. In Canada, funny enough, tax dollars go to the government, and some of those tax dollars are used as subsidies to education, where the government will give the educational institutions money and say, here, use this as part of the fee or the tuition to get students in, and then have the students pay less. So, for example, education might be $10,000 a semester. But with subsidies, it might go down to $8,000 for you, because the government will pay $2,000 on your behalf, effectively. You pay the other $8,000. So the school still gets $10,000, but you weren't responsible for all of it. And that is a great way to basically improve education uptake, right? Education is super expensive. If you can make it cheaper for people, all of a sudden they're probably more willing to partake in it, right? So both of these things are really useful tools for governments to basically influence behavior. It's ways to make people stop doing certain things. It's ways to make people keep doing certain things. And taxes, as well as kind of an added benefit, just help collect money, right? The government needs funds to hopefully use wisely. And if they can, taxes can be a very good thing, right? So I want to set up some examples for you. And we're going to mainly talk about taxes, to be honest. I find that's the one that gets introduced or talked about the most in courses. Subsidies is basically the same thing. There's a small difference. Okay, so we're going to do taxes first, but kind of do subsidies proxied with it, right? So let's set up a scenario. Okay, you currently pay $10 for a pack of cigarettes. That is definitely not true. Cigarettes are far more expensive than $10. But for our example, it's a nice, easy number. Okay. The government wants people to smoke less. So they introduce a $1 tax per pack. Okay. Now, this is a little different than real life. Real life, you usually have percentage-based taxes. And we can do this with percentage-based. It just makes the math a little more complicated. And I think for the purposes of telling the story of how taxes work, it's conducive just to use a very simple example. All right, there's a $1 tax for every pack you sell, right? And what I'm going to throw in here is the tax is on the seller, okay? This is all the information you would basically need. So let's talk about a couple things associated with this. The first one is the idea of tax obligation. This is who is legally responsible for paying the tax to the government. So basically, if the government doesn't get its money, this is the group it's going to go to. In this case, we said it's on the seller. It could be on the buyer. That's a little less common, but it doesn't really change our analysis. All that's going to change is that different things move around in a different way. All right. What's interesting, though, is tax obligation is just one way of looking at this. We also have tax incidence. And this is who actually pays the tax. Now, it turns out when the government puts a tax on a seller or a buyer, it is unlikely that the seller or the buyer pays the entire tax themselves. Instead, one party will probably pay part of it, the other will pay the rest, and it depends on different factors. All right. We don't know this term yet, so I'm going to avoid the technical term, but tax incidence depends on how sensitive, which in economics are called elastic, which we'll talk about in a later video, people are to price changes. The more sensitive, elastic, again, you are, the less of the tax you pay. So basically, if you don't really care about the price changes and you'll just stop buying it if it gets too expensive, you don't have as much responsibility in paying the tax. But if you have someone who's, let's say in the case of smoking, addicted to cigarettes, they're probably very insensitive to the price. They're inelastic, as we call it. And basically the idea would be that if you raise the price on cigarettes, they're still going to buy cigarettes, right? We already said that already, that most people won't quit smoking because of the price. So in this case, right, if we take our smoking example, the seller and the buyer probably have different sensitivities. The buyer is addicted to cigarettes, which makes them very insensitive. And the seller, well, they're just a business, so they're not really sensitive or insensitive to the price necessarily. So based on that, it's likely that the buyer is going to pay more of the tax. Okay, and the seller will pay less because they are more sensitive, right? It's a bit of a reverse direction here. Now, how does this work? Well, here's our handy dandy thing. We've got our demand down here, and we're going to put our supply up here, specifically without tax. All right. So what we are going to do is we're going to mark out our current situation. So without the tax, we've got a price of, let's say, $10 and a quantity of something easy, 100, right? So what's going to happen is this. When a tax is introduced, we raise the curve of the person who is legally obligated. Let's say who the tax is on. Okay. So in this example, all right, we are affecting supply. So for our purposes, the supply curve will shift up since the tax is on the seller. Okay. Now, I should say, raise is kind of not the best phrasing here, because if the tax is on the buyer, we would shift supply down. Now, notice I'm saying down and up here as opposed to left and right like we normally do. This is a bit of a unique thing about taxes. You could view it as left and right still. I just think up and down works better for most people. Okay? So basically, you'd be reducing them in either case, right? Supply going up is basically like supply going left. Demand going down is basically, let's fix that word. Demand going down would basically be it shifting to the left. All right. So basically, when there's a tax introduced, we do less of the supply, less of the demand, whatever the case may be. Okay. So since we're on supply, I'm going to take my supply curve. I'm going to shift it up or left, again, whatever you prefer. And we're going to label this new one supply with tax. Okay. And it's important to note that we are shifting it upward by the tax amount. So in this case, we're going exactly upward by $1. Okay, there's an upward shift of $1. So the next thing we have to do, we need to find the new equilibrium after the tax is introduced. Okay, so for our purposes, that is right here. Okay, so we'll dot it out, we'll dot it down, and let's say, we reduced it from 100 people to 90 people, right? So the tax is doing a bit of its work. It's reducing the amount of people smoking. One thing I want to quickly point out is the price, right? A lot of people want to jump in and say, oh, this must be 11. And I'll tell you right now, it's not, okay? It was 10 here, so if I go up, it would be 11 up here, but this is not as high. And again, the reason is some of the tax is going to go to the seller. So whatever new equilibrium we get, it'll be between 10 and 11. It won't be 11 likely, unless they're paying all the tax, but instead, we're going to get something like, I don't know, 1070. So let's throw that in there. This new equilibrium will have a lower quantity and a lower price, and a higher price. The new price will be between the initial amount and the initial amount plus the tax. Okay, so in this case, the initial amount again was going to be $10, and the initial amount plus the tax would be $11. So in this case, I've picked 1070. That's honestly very random, but we're going to go with it. All right. From here, we now need to make a dotted line all the way through that new equilibrium. So I'm just going to continue what I already started, but something like this. And then what we're looking for is we want to hit the old curve. So because we're looking at supply, we want to hit the supply curve down here. If we're doing demand, we'd hit the demand curve. Okay. We need to draw a line through the new equilibrium quantity, through the new equilibrium. We need to mark off where it hits the old curve, i.e., in this case, S without tax. Again, if it was the demand side, we would do it with the demand curve. Because it's the supply version, we're doing it supply. All right. Now, we can also mark off the price on this. Okay. And something interesting here is that this is directly below our new equilibrium. And because it's directly below, we know that gap is $1. So this bottom number must be $9.70. Okay, because if I'm going exactly the tax amount down from here, the tax is $1. So from 1070 down $1 is 970. It's a lot of work, and it's by far one of the more complicated graphs you run into in introductory microeconomics. But if you can get to this part, you're absolutely amazing. Sometimes, again, even probably a lot of the time, most courses will just give you these three numbers on the side, in my experience, just because the drawing can be quite difficult for beginners. But once you have these three numbers, that's where the actual tax analysis comes in. So what we're going to do is, this is a method I've developed over the years that I think works really well for dealing with taxes. We're basically going to have three numbers. We're going to have a high number, a medium number, and a low number, right? And for our purposes, we know what they are. The high number is going to be $10.70. The medium number is going to be the $10. And the low number is going to be the $9.70. All right, they're called high, medium, and low based on both their size, but also where they're positioned on the graph. Right? Now, each of these means something, okay? The $10 in the middle, or whatever the middle number is in your example, this is the amount the buyer paid and the seller received before the tax. So essentially, I would walk into a store. I want cigarettes. I give the store owner $10. They give me cigarettes. They keep the $10. Our transaction is done. Okay, very simple. Once the tax is introduced, though, we get this break. We get this high and low number. And what's going to happen here is the high number is going to be the amount paid by the buyer after the tax is introduced. Okay, So again, there is now a tax on smoking. So this buyer now has to walk into the store, and instead of $10, he gives the owner $10.70. Okay. The low number is the amount kept by the seller after the tax is introduced. So we have a different situation now. Before, I walk in, I give you 10, you give me cigarettes, you keep 10. Now, I walk in, I give you $10.70, you give me cigarettes, and you only keep $9.70. So there's $1 missing. And that dollar is what goes from the seller to the government. Okay, that's the tax. So this is what all three numbers mean. The other neat thing about this is it shows you the relationships that exist. So first one is high to low. If I go high minus low, this is the amount of tax. This is the size of the tax, we'll say. So for example, right, if I do the high number of 10.7 minus 9.7, I get $1, which again, we know is the tax. So in this problem, if they didn't tell us the tax, but we had these numbers, we could figure out the tax, right? On the other side, if I go between high and medium, so if I do high minus medium, this is amount of tax buyer pays. So in this case, again, it's going to be the $10.70 minus the $10, which is 70 cents. And below, if I go medium to low, I get the amount of tax seller pays, right? Because they're both contributing. The seller doesn't directly pay per se, but because they're taking a pay cut of 30 cents, that's what's going to the government. So again, they would have $10 minus 9.70, which is 30 cents, right? Taxes are complicated, okay? The nice thing is, though, is that even if this was on the buyer, this would be the exact same process. Everything down here would be the exact same, okay? The only difference is that instead of moving the supply curve up, you would move the demand curve down. So you could almost imagine, just going back to this drawing for a second, but demand would basically do this. It would move down, and then you'd get an intersection here, but then you would go up to the old curve, and you'd get the exact same numbers. And that kind of leads to our interesting thing, which is it doesn't actually matter who the tax is on. In fact, okay, the incidence will be the same either way. So even if you have a question that puts the tax on the buyer, okay, you can just pretend it's on the seller and get the same answer. Okay, you really don't even have to learn the other method, which is demand moves down, because if you have a situation like that, just pretend like it's on the seller anyways, and then do the supply version, you will get the exact same numbers. Okay, you do not have to learn a new method to do the same thing. And I'm a big proponent of that. If we can do multiple things in one way, let's just do that. Okay, so that is taxes. We're running pretty long here today, but we're going to throw in subsidies. Like I said, it's pretty much the same thing. The only real difference between subsidies and taxes is that you move the curve in the other direction. Okay, so let's quickly write that up. Actually, let's do this first. Okay, so for subsidies, you basically do all the same things. Okay. The only difference, if the subsidy is on the seller, move supply up. Oh, sorry, move supply down, my bad. If the subsidy is on the buyer, move demand up, right? Basically, you just do the opposite. So for example, if I had, my supply without subsidy. So let's say for some reason I'm putting a subsidy on cigarettes. Like I really want you to smoke, so here's some free money. Well, I would just do the same thing. I'd say here's $10. Okay, cool. Then I would move supply. Again, won't matter if it's on buyer or seller, just force it to be supply. I'd move it down. I'd get a new equilibrium over here, which would be a lower price. Let's say, I don't know, $9.30. Actually, let's do $9.20 just so we don't just keep having the same issue. And then look at, I would do the same thing. I would draw a line through. I'd mark the new equilibrium. That new equilibrium would be exactly the tax rate higher. So let's just say $1. It would go to 10.20. And we would basically get the same sort of 3-number setup. Now, the only difference is, again, they're reversed. Okay. So high, medium, low. Well, the low number is $9.20. The middle number is $10. And the high number is, in this case, $10.20. All right. All the same stuff applies, just reversed. So the middle can't be reversed, so it's just the same thing. But the top, this is now going to be, what the seller receives after subsidy. Because basically the supplier wants to get more money and they're getting 20 extra cents. The low number is what the buyer pays after subsidy. So now we're in a weird situation. Again, we're using smoking, but that's a terrible example. You would walk into the store, and so it used to be I give you $10, you keep $10. But now I walk into the store, I want cigarettes, I pay you $9.20, so I'm getting a good deal. You keep the $9.20, plus the government gives you $1 for selling that to me, and you get $10.20. You're better off, I'm better off. Again, this encourages this sort of behavior. Now, let's replace, honestly, smoking with something like education, and this will make a lot more sense from a pricing standpoint. I just didn't want to make up new numbers just because of time, right? Subsidies and taxes are a difficult concept. You might have to watch this video again, slow it down, etc. But they are things that you're going to run into in life. I mean, taxes are literally unavoidable, along with death. So you probably should understand the basics of how they work and what they're trying to do, because that can give you a little more clarity in how you feel about taxes. They're not just always a bad thing. There is a purpose to them when things are done correctly. All right. With that being said, that is it for today. I hope you enjoyed it, and I'll see you next time. Bye-bye. Well, folks, that wraps up another lesson for today. I hope it was helpful. If you found the video valuable, please make sure to like and subscribe. And if you have any questions about the content or requests for other topics or subjects you'd like me to cover, please leave a comment below. Until next time, keep learning and make it easy.